Hey everyone, welcome back to BullionIQ. I'm thrilled to have you here today. I hope you're all having an amazing day wherever you are. Today we've got some huge breaking news in the crypto world, especially if you're holding XRP, or even if you aren't. This is one of those videos that you'll want to watch all the way through because the developments we're seeing could change everything for XRP. From Japan's 10-year government bond yield surging to major moves by central banks, there's a lot happening, and it's getting intense. If you're someone who likes talking about Ripple and XRP, I want you to type an X in the comments below and smash that like button because we're diving deep today. First, let's talk about what's going on in Japan. Recently, Japan's 10-year government bond yield shot up to 1.84%, the highest level since April 2008. Now, that may sound like a boring finance stat, but it's really important. A bond yield rising this high can shake markets, and it tells us something big is happening with money flows globally. Basically, investors borrow a lot of cheap yen to invest in other assets. When the yen suddenly strengthens, these investors have to pay back their loans, which can lead to rapid selling in stock markets all over the world. This is called the carry trade unwinding, and it has major implications for global markets. But here's where XRP comes in. XRP was built to handle large amounts of value moving quickly across borders, and it was designed to solve exactly the kind of problems traditional banking faces in situations like this. Next, let's move over to Singapore, because this is where things get really exciting for Ripple and XRP. The Monetary Authority of Singapore, MAS, has officially green-lighted Ripple to expand its license. What does this mean? It means Ripple can now offer full digital payment services in the region, including holding, swapping, and sending digital tokens like XRP and RLUSD. This is a huge step because it's coming from a major central bank that's known for clear and strict regulations. Ripple's president Monica Long praised MAS for setting a leading standard in digital asset regulation. Essentially, this approval allows Ripple to invest more in Singapore and strengthen the financial system there, making it easier for institutions to move money quickly and efficiently. So, why is this such a big deal? Well, people who call XRP a scam simply don't understand the fundamentals. The central banks are now seeing XRP as a legitimate tool for real-time settlement and liquidity. When large sums of money need to be moved quickly across borders, traditional banking systems are slow and expensive because of Nostro and Vostro accounts. XRP eliminates these bottlenecks, providing a fast and reliable alternative. In times of market stress, like when the Japanese carry trade is unwinding, XRP's ability to move money instantly becomes even more valuable. It's not just about price speculation, it's about utility and solving real-world problems that the financial system faces today. Now, let's talk about the market itself. Right now, markets are volatile, and the price of traditional assets like stocks is feeling the pressure from bond yield changes and global liquidity shifts. Quantitative tightening has been the trend, but now we're seeing a shift toward quantitative easing as central banks inject liquidity back into the system. This is important for XRP because increased liquidity and institutional adoption often lead to higher demand for digital assets that provide real utility. XRP's role in cross-border payments makes it a key player here, and the timing couldn't be more interesting. Adding to this, some analysts are making bold predictions. Chad Steinbrenner recently said that a $250 XRP price could be inevitable. Now, I want to be clear, no one can say exactly when XRP will reach this price. Timing is always uncertain. But the fundamental point is that XRP was built to handle high-value transactions, and its design inherently supports significant long-term value. Even former CTO David Schwartz has hinted at XRP potentially reaching prices far beyond current levels. When we start talking about 3-digit or even 4-digit potential, it's not just hype. It's about what XRP was engineered to do. It's also worth noting that as capital flows back into Japan and global credit markets tighten, the demand for a neutral, real-time settlement system outside of traditional currencies like the dollar or yen is no longer optional. It's becoming essential. XRP fulfills this exact need. So, while some may fear the carry trade unwind as a risk, for XRP, it's actually an opportunity that Ripple anticipated from the very beginning. The system is designed to thrive in these high-demand, high-pressure scenarios. Finally, let's bring this all together. Between Japan's rising bond yields, Singapore's regulatory green light, quantitative easing on the horizon, and analysts forecasting high potential prices, we're witnessing a moment where XRP's utility, adoption, and value proposition are aligning. This isn't just speculation, it's structural, real-world demand coming into play. Investors, traders, and institutions are starting to recognize the potential, and as the market evolves, XRP could see major gains, not just in price, but in its adoption as a trusted settlement system globally. So that's the start of our discussion today. Things are moving fast, and as always, I want to hear your thoughts. Are you excited about XRP's role in cross-border payments? Do you think $250 is realistic? Drop your opinions in the comments. Let's get the discussion going. And don't forget to like and subscribe to BullionIQ for more updates like this. In the next part, we'll break down what this Japanese carry trade situation really means for investors and how XRP is positioned to benefit in real time. All right, now let's dive deeper into the Japanese carry trade and why it matters for XRP and the broader crypto market. If you're not familiar, a carry trade is basically when investors borrow money in a low-interest currency, like the Japanese yen, and then invest it in higher-yield assets around the world. For years, this has been a major strategy because Japan has had ultra-low interest rates, meaning you can borrow yen very cheaply. Investors would then take that cheap yen and buy stocks, bonds, or other assets elsewhere, earning a higher return. This has created massive flows of capital across global markets, and it's been a huge factor behind asset price movements for decades. But here's where it gets tricky. If the yen suddenly strengthens against other currencies, investors have to repay their loans quickly, often by selling the assets they bought with that borrowed money. When this happens on a large scale, it can cause a rapid market crash because everyone is trying to unwind their positions at the same time. This is exactly what we're starting to see signs of now. Japan's 10-year government bond yield jumping to 1.84% indicates that borrowing costs in yen are rising, which can trigger a reverse carry trade. Big investors rush to pay back yen loans, and suddenly stocks and bonds worldwide can experience heavy selling pressure. So, why is XRP relevant in this scenario? Traditional banking systems are slow and costly when it comes to moving money across borders. Large-scale transactions require pre-funded accounts called Nostro and Vostro accounts. This means banks have to deposit money in foreign banks before they can execute transfers, tying up capital and creating inefficiencies. During times of global market stress, like a sudden reverse carry trade, these inefficiencies become even more problematic. XRP was designed to solve this exact problem. It provides on-demand liquidity, enabling institutions to move large sums of value instantly without having to pre-fund accounts. This makes XRP uniquely positioned to thrive when traditional markets are under pressure. Another important point is how central banks are viewing this. Ripple's approval in Singapore is a clear signal that regulators are recognizing the value of XRP as a settlement and payment solution. They're not just looking at XRP as a speculative asset. They're seeing it as a real infrastructure tool for financial institutions. This is huge because institutional adoption is what ultimately drives long-term demand for digital assets. The more banks and major players integrate XRP into their systems, the more essential it becomes, and that increases both utility and value. Let's also talk about the broader implications for global liquidity. As large capital flows move back into Japan and credit markets tighten, there's going to be a rising demand for alternatives to traditional banking settlement systems. The reverse carry trade isn't just a temporary problem, it highlights a structural need for faster, cheaper, and more reliable cross-border settlement. XRP directly addresses that need. Its ability to move millions or even billions of dollars in seconds gives it a competitive advantage over slow legacy systems, especially during periods of market stress. Now, some people might worry that XRP's price could be negatively impacted if markets crash due to the yen strengthening. While short-term volatility is always possible, it's important to separate price speculation from utility and adoption. XRP's design doesn't depend on short-term market swings. Its value proposition is rooted in solving real-world banking problems. When global markets experience turbulence, institutions are more likely to seek solutions like XRP to maintain liquidity and move money efficiently. In other words, market chaos can actually highlight XRP's usefulness rather than harm it. Another interesting point to consider is what analysts like Black Swan Capital are saying. As capital flows back into Japan and traditional credit markets tighten, they argue that the demand for a neutral, real-time settlement system beyond traditional currencies is no longer optional, it's necessary. This is exactly what XRP offers. It can act as a bridge currency, enabling banks and financial institutions to settle transactions quickly without relying on the dollar, yen, or euro. This is particularly important during times of quantitative easing or tightening, as we're seeing today. The more money central banks inject or remove from the system, the more pressure there is on existing liquidity channels. XRP can fill that gap. Let's also touch on the psychological aspect of XRP adoption. Right now, some people in the community are focused on price targets, like the $250 figure mentioned by Chad Steinbrenner. While exact predictions are always speculative, it's crucial to understand why these predictions exist. XRP was designed for high-value settlements, which means its potential price should reflect its utility in moving massive amounts of money across borders. When you consider the increasing adoption by financial institutions and central banks, it's not just hype, it's the market recognizing a scarce and highly useful digital asset. Finally, let's bring this all together. The Japanese carry trade, while complex, is creating conditions where the world's financial system is highlighting inefficiencies in traditional banking. XRP is perfectly positioned to solve these problems, providing speed, liquidity, and reliability that old systems cannot match. Combined with regulatory approvals in major markets like Singapore, increasing institutional interest, and growing awareness among central banks, XRP is not just surviving these market shifts, it's potentially thriving in them. Let's shift our focus to one of the biggest news stories for XRP recently, Ripple's approval from the Monetary Authority of Singapore, MAS. This is a game changer, not just for Ripple, but for XRP and the broader crypto ecosystem in Asia. Singapore is a major financial hub, known for its strict regulatory standards and its influence in global finance. When MAS gives the green light to Ripple to expand its license, it's more than just a local development. It signals global legitimacy for Ripple's operations and XRP usage and payments. So what does this approval actually mean? Essentially, Ripple has been granted an expanded license to offer full digital payment services in Singapore. This includes the ability to hold, swap, and send digital tokens like XRP and RLUSD across the region. For financial institutions, this is huge. It means they can use Ripple's network for cross-border payments without worrying about regulatory hurdles, making it easier for banks and companies to integrate XRP into their systems. The expanded license removes a lot of friction that previously slowed down digital asset adoption in Asia. Monica Long, Ripple's president, praised MAS for providing clear and structured guidance on digital assets. This is important because regulatory clarity reduces uncertainty for institutions. When banks know exactly what is allowed and how compliance works, they are more likely to adopt XRP and Ripple's payment solutions. This is a major step forward in building trust between traditional finance and crypto technology. It's not just about speculation or trading, it's about XRP becoming a functional tool in real-world finance. The Singapore expansion also has regional implications. Asia is home to some of the world's largest economies and fastest-growing financial markets. Countries like Singapore, Japan, South Korea, and others are increasingly exploring digital assets for payments, remittances, and cross-border trade. With Ripple now fully licensed in Singapore, it opens the door for XRP to be used across the region in major financial transactions, ranging from corporate payments to interbank settlements. This is a massive boost for adoption because Asia represents a significant portion of global financial activity. Another key point is how this fits into Ripple's long-term strategy. Ripple has always focused on building institutional partnerships rather than just being a speculative asset. The Singapore license allows Ripple to strengthen relationships with banks, fintech companies, and payment providers in Asia. These partnerships are critical for XRP's growth because they create real-world demand for the token. When banks start using XRP for cross-border settlements, the token's utility and value naturally increase. Let's also consider the timing. The approval comes as global markets are experiencing volatility due to things like the Japanese carry trade and changing bond yields. During such times, financial institutions look for efficient and reliable systems to move money. Ripple's network, backed by XRP, provides instant settlement, low cost, and high liquidity. This makes it particularly appealing in a region like Asia, where cross-border payments are a daily necessity for businesses and banks. XRP's technology is solving a real, urgent problem, which is why institutional interest continues to grow. On top of that, MAS's approval sends a signal to other regulators. Singapore is often seen as a benchmark for digital asset regulation. When other countries see a major financial authority endorsing XRP and Ripple's infrastructure, it increases confidence globally. This is crucial because wider regulatory acceptance tends to drive adoption, encourage institutional investment, and reduce the perceived risk of using digital assets like XRP. Essentially, Ripple's Singapore success could set a precedent for other markets in Asia and beyond. We also have to look at the technical implications. With the expanded license, Ripple can enhance its local infrastructure, ensuring that transactions are faster, cheaper, and fully compliant with regional laws. Banks and companies can now integrate XRP with their existing systems more easily, reducing costs associated with traditional banking. This is exactly what Ripple envisioned from the start, creating a liquid and efficient network for global payments. As adoption grows, the demand for XRP naturally increases because every transaction requires liquidity. Another interesting aspect is how Ripple's Singapore expansion interacts with global monetary policy. As central banks engage in quantitative easing and tightening, liquidity pressures emerge in traditional markets. XRP provides a neutral settlement layer that isn't tied to any single currency like the US dollar or yen. In other words, as global capital flows fluctuate, XRP can act as a bridge to move money instantly and efficiently across borders. This makes it an essential tool for international finance, especially in regions where cross-border payments are high volume and time-sensitive. Lastly, the Singapore approval strengthens the perception of XRP as a high-value asset. When central banks and regulators recognize the token's utility, it reinforces the idea that XRP is not just another cryptocurrency, it's a financial infrastructure asset. Analysts and investors take note of this, which can influence institutional strategies, long-term holdings, and market sentiment. In combination with developments in Japan and growing analyst predictions about higher XRP prices, this regulatory win positions Ripple and XRP for substantial growth in the months and years ahead. To sum up this part, Ripple's Singapore license expansion is more than just paperwork. It's a strategic milestone. It validates XRP's utility, encourages institutional adoption, and positions Ripple as a leader in cross-border digital payments in Asia. With regulatory clarity, growing partnerships, and the ability to process real-world transactions efficiently, XRP is no longer just a speculative token. It's a key player in the global financial system. For investors, traders, and anyone following crypto, this is a signal that XRP's adoption and value could grow significantly as the market evolves. Let's step back and look at the broader market trends and why XRP could benefit from what's happening globally. Right now, we're seeing major movements in global liquidity, central bank actions, and market sentiment. These forces are creating the perfect conditions for XRP to shine as a real-time settlement and liquidity solution. Understanding these trends is critical if you want to see why analysts are talking about huge potential gains for XRP. First, let's discuss quantitative easing, QE, and why it matters. QE is when central banks inject money into the economy by buying government bonds and other assets. The goal is to increase liquidity, encourage lending, and stimulate growth. We've recently seen signs that major central banks are moving toward more liquidity injections, which is the opposite of quantitative tightening. This means more money is flowing into the financial system, but it also creates challenges for traditional banking and global payments. As liquidity increases, there's a higher demand for systems that can move large amounts of money quickly and efficiently, and that's exactly where XRP comes in. XRP was designed to handle large-scale cross-border transactions without the need for pre-funded accounts. Traditional banks rely on Nostro and Vostro accounts, which tie up capital and make the process slow and expensive. In times of market stress or when liquidity is shifting rapidly, these systems struggle to keep up. XRP, on the other hand, can provide instant settlement, giving banks and financial institutions a faster, cheaper, and more reliable alternative. This is especially important as central banks inject more money into the system and global capital flows increase. Let's also consider institutional adoption. Institutions are not just investing in crypto for speculation. They're looking for tools that solve real-world problems. XRP is increasingly being recognized as such a tool. With Ripple's network, banks can move money across borders in seconds, reduce operational costs, and eliminate the need for pre-funded accounts. Regulatory approvals, like the one in Singapore, make it easier for these institutions to adopt XRP safely. The combination of regulatory clarity and real utility is what drives long-term demand for XRP. Global liquidity trends also highlight another important point: the carry trade dynamics we discussed earlier. As money moves in and out of countries like Japan, and as central banks adjust interest rates, there's a constant need for efficient settlement mechanisms. When investors rush to repay loans or shift capital due to currency movements, traditional banking systems can become bottlenecked. XRP provides a solution to this problem by offering liquid, on-demand settlement. This is why some analysts see XRP as not just a speculative asset, but a necessary infrastructure tool in modern finance. Now, let's talk about the psychology of the market. Many people are focused on price predictions like $250 or even higher, but the bigger picture is XRP's adoption by institutions and central banks. When financial authorities recognize the usefulness of XRP for cross-border payments, it validates the technology and strengthens investor confidence. The more XRP is integrated into banking and payment systems, the higher its utility and the more essential it becomes. Market sentiment tends to follow adoption trends, which can lead to sustainable price growth over time. Another critical aspect is the shift from traditional currency dependence. XRP acts as a bridge currency, allowing transactions without relying solely on the US dollar, euro, or yen. This neutrality is valuable because global markets are interconnected, and reliance on one currency can create bottlenecks or vulnerabilities. XRP provides a universal settlement layer, which is why institutions are increasingly interested in it. During times of rapid liquidity changes or market stress, having a neutral, fast-moving settlement option is a game changer. Let's also examine quantitative tightening, QT, versus quantitative easing, QE, in relation to XRP. During QT, liquidity is removed from the system, making money more expensive to borrow and slowing down economic activity. In such periods, traditional systems can struggle with cross-border payments. QE, on the other hand, increases liquidity and encourages more transactions. Whether the market is tightening or easing, XRP's technology ensures that value can move instantly, reducing friction for banks and businesses alike. This flexibility is a huge advantage over legacy systems. Institutional investors are increasingly seeing this. As Ripple expands in Asia and other regions, and as global liquidity flows fluctuate, XRP becomes a tool of choice for solving real-world financial problems. This isn't just speculation. It's based on observed demand for efficiency and reliability in international transactions. The fact that central banks and regulatory authorities are engaging with Ripple adds credibility to XRP's role in finance, which further encourages adoption. Finally, the current market environment, with all its volatility, actually highlights XRP's strengths. When traditional markets are under pressure, institutions look for stable and fast settlement mechanisms. XRP's ability to move funds instantly, reduce costs, and bypass slow legacy processes makes it an attractive solution. Combined with regulatory approvals, growing institutional interest, and predictions of higher future prices, the market trend suggests that XRP is well positioned for significant growth, both in adoption and value. To summarize this part, global liquidity shifts, central bank actions, and market volatility are creating the perfect backdrop for XRP's technology to shine. Ripple's network addresses inefficiencies in traditional banking, provides real-time settlement, and is gaining recognition from regulators and institutions alike. As quantitative easing continues, as carry trades adjust, and as adoption grows, XRP is not just a speculative asset, it's becoming an essential financial infrastructure tool. And it's important to understand these in the context of everything we've discussed so far: global liquidity changes, carry trade dynamics, Ripple's regulatory wins, and increasing institutional adoption. While no one can predict the exact date XRP will reach certain price levels, the fundamental factors supporting its value are very strong. One of the most talked about figures recently comes from Chad Steinbrenner, who suggested that $250 XRP could be inevitable. Now, some people may find this shocking, but if we think about XRP's utility, technology, and growing adoption, it's not as far-fetched as it sounds. XRP was built for high-value transactions and cross-border payments. Its design inherently supports large-scale liquidity and real-time settlements, which means the token's value is closely tied to the demand from institutions and financial systems worldwide. As more banks integrate XRP into their infrastructure, the demand for the token increases, naturally impacting its long-term value. Even former CTO David Schwartz has hinted at extremely high potential prices for XRP, sometimes talking in the thousands. While these numbers may seem astronomical, it's important to understand the logic behind them. XRP's purpose is not speculation, it is solving real-world problems. When a token has high utility and is adopted by financial institutions, its value can scale significantly because it becomes an essential part of global financial infrastructure. The high-end predictions reflect this potential for structural demand, not just market hype. We should also consider how current market conditions might accelerate XRP's growth. The Japanese carry trade, global liquidity injections from quantitative easing, and the push for faster cross-border settlements create an environment where XRP's technology is in high demand. As institutions seek reliable solutions for moving money efficiently, XRP is uniquely positioned to fill that gap. Every new adoption, partnership, or regulatory approval strengthens the case for XRP's increasing value. Another key factor is community engagement. The XRP community has been strong and supportive, consistently advocating for adoption and raising awareness about the token's real-world utility. A united community can help drive awareness and institutional interest, which is critical for long-term growth. Engaging in discussions, sharing insights, and following regulatory developments are ways the community can actively participate in XRP's journey, which complements the work Ripple is doing on the institutional side. Now let's talk about risk and volatility. Like any asset, XRP will experience short-term fluctuations, especially during periods of global market stress. The Japanese reverse carry trade, for example, can cause temporary turbulence. However, it's crucial to separate short-term price movements from long-term adoption and value. XRP's design ensures it remains a solution for large-scale cross-border liquidity, which means that even if prices swing, its fundamental utility is not compromised. Investors who focus on XRP's role in the financial system are better positioned to understand its true potential. Looking at analyst opinions, the consensus is clear. XRP's adoption by financial institutions and recognition by regulators is what drives sustainable growth. Price predictions, whether 250 or higher, are rooted in the understanding that XRP is not just a speculative token, it's a financial infrastructure asset. Analysts are watching key factors like Ripple's partnerships, regulatory approvals, and global liquidity trends to gauge XRP's potential gains. The takeaway is that XRP's price will likely reflect its adoption and utility over time rather than just market hype. It's also worth noting the role of central banks. As institutions like MAS in Singapore endorse Ripple and XRP, it sends a strong signal to the global financial system. Central banks and regulators set standards for others to follow, and their recognition of XRP's utility increases confidence among banks and large-scale investors. This institutional backing can be a major catalyst for long-term value growth, which is why XRP's price potential is so closely tied to adoption and utility. So, what does all of this mean for you as an investor or someone following XRP? First, understanding the fundamentals, how XRP works, its role in cross-border payments, and its adoption by institutions is essential. Price targets like $250 or beyond are not just speculative numbers. They reflect the growing demand for XRP as a reliable, efficient, and scalable financial tool. Second, keeping an eye on market trends, central bank actions, and Ripple's partnerships will help you stay informed about potential catalysts for growth. Third, engaging with the XRP community and staying updated on regulatory developments provides insights that go beyond headlines and social media hype. To sum up, XRP is entering a transformative phase. The combination of market trends, regulatory clarity, institutional adoption, and technological utility sets the stage for significant long-term growth. Analysts predicting high price targets are not just guessing. They are looking at structural factors that support XRP's role in the global financial system. Whether it reaches $250 or even higher in the coming years, the fundamental story is clear. XRP is designed for high-value transactions, it solves real-world banking problems, and it is increasingly recognized as a critical infrastructure asset.